What a week that was. Today we're going to talk about the inflation numbers that came out, the Bank of Canada cutting, and why the Bank of Canada cutting doesn't matter for millions of Canadians. So first up, yes, inflation came in higher again. And yes, the Bank of Canada cut, even though inflation is here. Now, core inflation, trim, median, none of those changed. Those are still in the 3% range, which is too high and has been what the Bank of Canada has been saying is why they have not been cutting. But basically, the jobs numbers were so bad. The investment numbers that came out over the summer were so bad that the Bank of Canada had no choice but to cut. Headline inflation went up again to 1.9%. 1.9 to 1.7 are where headline keeps bouncing around. Same thing I said last month and the month before. Gas prices did not fall as much as the month prior compared to the year prior. That is literally why we're seeing these little bounces, little bounces, little bounces. Now, the Bank of Canada cut rates because they are hoping that that will mean more investment, more people hired, more construction. Remember that residential construction is one of the number one industries in Canada. Without it, we are in a deep recession. So they are trying to do their part. Now, they know that residential construction is in the shitter. Why didn't they cut half a point? They know that the majority of mortgages come up over the next now, I think it's 11 months now, that the majority come up. Why didn't they cut more than a quarter point? First of all, it's because they still don't have a budget. At least now we know that November 4th, we're supposed to get a federal budget. So they're flying blind and trying to minimize the amount of risk that they open things up to. Second thing is that they are completely risk avoidant. And the last thing that they want to do is raise housing prices so that inflation goes back up so that they have to raise their rates again. It's a big mess. Now, if their plan, if their hopes come to fruition, that does mean that inflation is going to tick up. They're sort of betting that inflation, because we're currently in a recession, that inflation will not tick up as quickly as the recession dies down. So they're trying to run a balance here, and hopefully they can do it. In the meantime, some absolutely horrific monetary news came out yesterday about what is happening in Canadians' actual lives. Now, we're talking about mortgages here, and we're talking about loans. So yesterday, a report came out of Stats Canada talking about how much mortgage debt, non-mortgage debt, car loans, secured loans, non-secured loans, everything, every kind of loan that Canadians have. How much and who is holding that debt? And it has gone up, which some will point to as, look, mortgage debt has gone up a bit. That means that construction is doing better. But when you get into the numbers, non-bank carried mortgage debt, private financing, is up 3.22% since March. 3% of mortgages, more than in March, went to private lenders. Yesterday's cut means nothing because those people are paying practically credit card rates, upwards of 12%, on their mortgages to keep the roof over their head. And more people are being forced into this. Now, if you didn't see my video on mortgages and how banks are pushing people into that, I'm going to put it right here so that you can watch that and see how the banks are manufacturing this. Equifax put out their data for Q2. 62.8% hike. Second quarter of 2025 compared to second quarter of 2024. That is the number more people in Ontario defaulting on their mortgages. Now, once again, I have discussed this at length before, how people will pay, they will skip the car payment, they will skip meals, people will skip every other payment to avoid skipping the mortgage payment. That number of people delinquent, 90 days late on payments, has gone up almost 63% in the largest province in Canada, is a huge red flag. So, Bank of Canada's rate cut yesterday. Everybody's going to go on about it and talk about how it's great and it's going to spur spending and it's going to spur construction and more people are going to move. And you are going to hear that from every real estate and mortgage sales talking head. When in reality, the number of people who are underwater and cannot breathe, the number of people who are drowning is going up exponentially month over month. So, is the Bank of Canada cut going to really help? I don't know. It may not. It may raise inflation. We have no idea what is going to be in this budget. If there's a lot of spending in this budget, and I mean direct spending to Canadians, then we have a really big problem and inflation could soar. So, the Bank of Canada did what it had to do, devalued our dollar, made it so everything else was more expensive, and possibly raising inflation even further, costing Canadians more money. And at the same time, we have more Canadians falling by the wayside in the dark corners that people aren't noticing. People aren't noticing the struggle. You don't know if your neighbor is about to lose their house. You don't know if your neighbor is not answering their phone because their car is about to be repossessed. We have serious issues in Canada, and hopefully at some point we can get past all of the rhetoric and start dealing with them. I hope that you have a wonderful weekend. Thanks for watching.